Hi, everybody. This is Abdullah Shamari with you all again. As always, make sure to subscribe as well as like the video to be able to see content similar to this, stock recommendations, uh, informational videos about stocks, etc. Today, we'll start to go through some tools and metrics that I look for when picking stocks. The video will be short in duration in order to give a lesson periodically and to not overload you all with information. Buying and selling stocks is a skill and you need a practice in order to succeed. I'd recommend to start trading with a simulator account through Investopedia or other websites to practice your analysis and to see how well you do using the S&P 500 as a benchmark. S&P 500 is generally a good benchmark because it's averaged 10% returns year over year over the course of decades. So it's a very good indicator of whether you're doing well or if your analyses are subpar, and it might be better to just invest in an index or an ETF. So the first tool that we will go over is Stock Screener. Everybody has to have a stock screener. There's so much information out there these days, and everybody has access to this information. So you definitely want to use a stock screener. I myself use Finviz as my screener. Usually just go to finviz.com, click on screener, and then after that, I'll go to this all button so that it gives me all the metrics available to be able to look at. Today, we'll only go over the first metric that I look at, and probably one of the most important, which is price to book ratio. With this ratio, the screener basically looks at all the prices of individual stocks and divides them against their book value. And the book value for a company is the assets of the company minus the liabilities of the company. So basically, it tells you what the company is worth. So you want to make sure that the price is not far above the book value, and it could be in some cases with high growth companies, with companies with a lot of potential, or a company that has a lot of technology and they might have had a lot of losses. So it's something to be able to judge a company and how the price is looking compared to what the company is worth. But there might be other factors which we'll talk about later. But this is one of the first things that I'll look at. In addition, you want to be able to get a gauge of what the industry is when it comes to price to book value. It'll vary depending on industry. You can see here communications is at 3, energy is probably one of the lowest at 1. Usually technology companies are the highest because a lot of them have a lot of growth potential and in many cases are incurring a lot of losses in order to be able to grow and to be able to put out a product that hasn't been out there in the industry yet. So you can see for information technology about 10. So this is probably one of the most important metrics for a value investor is price to book, to be able to see if you're getting a stock under market value or if you're paying a premium to be able to get the stock. So this is the first of many lessons. So make sure to use price to book in your toolkit and stay tuned for additional videos with regards to tools and metrics to use when purchasing stocks. Take care, everybody, and don't forget to subscribe and like the video.